please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello, good morning and welcome. This is Power Breakfast on CNBC TV18. I'm Manglam Malu, and on this Thursday morning, which is incidentally the Friday because tomorrow is a holiday, is Surabhi Upadhyay. Surabhi, good morning. The big cue today, of course, will be the expiry. 600 runs is what we've made this series. Not the India-South Africa series, the January series for the Nifty.
What a phenomenal run, and all thanks to the kind of foreign money that's been coming in. But I'll take the first cue first. The fact that it feels like Friday. I think that's the biggest cue for me. SGX Nifty is pointing towards firmer start, at least for the time being. Well, let's take a look at all the cues as we are getting ready for the last trading day of what's been yet another good week for the markets. We've got Ekta joining in with the market action and the news and cues to watch out for. Ekta?
Well, you know, it's been a fabulous Jan series in any case. It's the first series for 2018 and we have no complaints coming in there. The Nifty's gained approximately around 5% at current levels. The mid-cap index up around 3.3% and the bank Nifty zoomed ahead with a gain of around 7.5% at current reckoning. Flows have supported and the FIIs have come back into the market. So the FIIs bought 776 crores yesterday. They've in fact bought in 14 out of 18 sessions in the month of January and have net bought over 8,000 crores in the month of January. So you can see the kind of correlation in terms of the market run-up as well as the FII flows as well. But it's not only India, it is the global picture which is seeing this kind of momentum. So for example, the MSCI Japan is up around 7.5% versus the Nifty, which is up around 3.5% on a year-to-date basis. So what I would be watching out for is that maintaining that 11,000 mark for the Nifty on expiry day. The US markets did okay, so they closed at record highs despite a volatile session in tech stocks. And separately, we also have you know, a lot of the metal stocks which have rallied, so do watch out for that. The other big cue is that the government has announced the PSU bank capital recapitalization. 88,000 odd crores is what's going to go into the bank's 20 PSU banks. But you know, the Nifty PSU index is already up around 7% on a month-to-date basis. So let's see how much is actually factored in and how much is incrementally probably going to see some amount of upside. Earnings today include the likes of Maruti, Dr. Reddy's, UPL, Avenue Supermarts, JSPL, Ajanta, Tata Coffee, VIP. So a lot to look out for there. So I'd be watching out for all of these stocks and earnings.
All right, Ekta, you spoke about a lot of stocks and also you are going to speak about Biocon and Dr. Reddy's. What are the other stocks you're watching out for?
Well, you know, obviously the PSU banks would be in focus. Besides that, Pidilite, profit up 18%. Can Bank, where the gross NPA is reduced on a Q-on-Q basis. Biocon, the profit down around 46% in line with expectations. Motilal, I'd watch out for the housing subsidiary because there the gross NPAs have risen. So I think there will be a impact even today on Motilal Oswal because the details have really come out. KEI Industries, profit up 50%. Liberty Shoes, loss at 51 versus loss at 70 odd crores year on year. City Cable, also revenue up 20% and the losses maintained at over 30 odd crores. Bharat Bijli, strong set of numbers there, profit up 189%. Everest Industries, strong set of numbers there. Ion Exchange also, where the profit is up 50 odd%. So I'd be watching out for these numbers.
Okay, all right. Thanks, Ekta, so much for that. We are going to come back to Ekta in just a bit for a lot of the specifics on some of the pharma numbers, Biocon, and the big ones that we're watching out for today. But for now, a story that's coming in from New Delhi. It's been a bit of a carrot and stick approach, but the government has finally announced a capital infusion of 88,000 crore rupees for PSU banks. The carrot was the fresh money infusion. The stick, well, 6 of them. So 6 stern conditions set by the government to banks for future infusion. These include ones like being friendly with small and medium companies, better digitization, and being more responsive to customer needs. Sapna Das joins in with more details on the recap and what it means for PSU banks. Sapna.
Well, Well, CNBC TV18 news break has been confirmed in terms of the government actually coming out with the detailed announcement of the PSB recap agenda for FY18. Having said that, very quickly, what has the government done? Basically, most of the allocation, if you look at the numbers, has gone towards those banks which are under the prompt corrective action of RBI. Over 52,000 crores worth of capital has been infused on that front, or will be infused on that front. In terms of the growth capital, the number is slightly under 36,000 crores. So the question now arises is that how is FY19 going to look in terms of further recapitalization from the government, and how will the banks meet the challenge, because there's a very clear-cut reforms agenda which has been put out by Finance Ministry and the Finance Minister. 55,000 crores worth of recap bonds, of course, is a straight government commitment on that front, but even to get that capital, all these banks, at least which are under the PCA, will have to show better results. So two issues on that front. Most of these banks will take at least 8 to 12 months to come out of PCA. But within that, they'll have to make sure that, rationalization of branches, especially the overseas branches, in terms of further monetization of non-core assets, in terms of raising money further from the markets, all these issues will have to be dealt by, by particular banks, so that at least the regulatory capital front remains all right for them in FY19. And that's where a big question mark has been raised, because the government has very clearly indicated that this capital infusion is going to be completely based on performance. A big challenge for PSB is going ahead in FY19, but of course the government on its part stands committed at least for FY18. Now we just have to wait and watch and see when the bond issuances will actually start for the current financial year.
All right, that was the big story last evening, and we got a lot of reactions from the government and bankers on this capital infusion announcement. Let's hear them out one by one.
The second part of the exercise is that the various steps to be taken in order to ensure that the governance of the banks follows the higher standards itself.
No impact on the fiscal deficit, but it adds to our liabilities. So that we have explained.
So how much does it impact on the liability side?
Same equal amount, 80,000 crores.
So the entire and so how much of the bonds, what would the contours of the bonds, sir?
I explained to you, bonds would have different maturities from 10 years to 15 years. 1/6 of the bond would be in one bucket of 10 years, another 1/6 likewise. So we will have 6 series of bonds.
So SBI, it adds 44 basis point to our capital, Tier 1. And we in any case had sufficient cushion. So the way to look at it is that it is all growth capital which has been given to SBI. We are a non-PCA bank. So for non-PCA banks, whatever capital has been given, so largely it will be used for the funding the growth. And PCA banks probably to first make up their international capital conform to the international regulatory requirements.
9,000 crores will help in taking aggressive haircut. That is separate. But NCLT cases already, that cases automatically will be getting right back a huge amount of capital, because 100% provisions in big accounts. So, but this capital will help a lot, taking haircut and going for growth also.
It's good because, some substantial amounts of capital have been announced for some banks, and also the time period, that is by 31st March. So I think it's good to take away the uncertainty, to have substantial amount of capital committed. And then along with that, of course, some governance, rules have also
What do you make of that?
Well, I think it's about saying that banking has to be done in a particular manner, and it's good to remind the whole set of banks, so to say that follow certain common guidelines, when there are breach of contracts and so on.
Quick handle on what's taking place in the Asian markets. We're getting early rates come by from Shanghai as well as Hang Seng, and both of them are in the red as we speak. Hang Seng is actually down about 0.5%. The Nikkei, that one's down 0.7%, primarily on account of the strength in the yen. But just take a look at the other indices. We have the Korean index that's moved higher up about 0.9%, and the Taiwanese index too up about 0.8%. Both of them piling on the gains. The Straits Times just about breaking into the green and has flattened out. The SGX Nifty indicated a start to the tune of 30 points, and that lead is still maintained, 32 points at the open. So let's get talking about a few earnings then. Dr. Reddy's reports its third quarter earnings today. Ekta, what are you expecting? Srikakulam, most important?
No, actually, Srikakulam will be a part of the commentary. But what we are expecting for Dr. Reddy's this quarter is more of the same in terms of what we have seen in previous quarters. So, for example, the revenue is expected to probably decline around 2.4% on a year-on-year basis. The range is anywhere of flat performance to a decline of around 6% We have the margins which are likely to come down to around 17% versus 23% on a year-on-year basis, with a profit decline this quarter. Now, why exactly is that? It's simply because of the revenue, which is going to be pushed down because of the US market's pricing pressure. So we've seen the pricing pressure in terms of a lot of their drugs, such as Dacogen generic, Vidaza, Emitrex generic, etc. But they have a couple of new launches. So, for example, Renvela generic, the kidney drug, which also Aurobindo launched, as well as the likes of Doxil generic, which is a cancer drug. And a ramp up in that is expected to probably offset the pricing pressure to a certain extent. But hence, we can expect maybe the US sales to grow around 5 to 7% on a sequential basis, but the pricing pressure is still expected to impact numbers year on year. Now, in terms of the margins, again, the pricing pressure is going to percolate down to the margins as well as the profitability. Now, what I would be watching out for would be the ramp up or maybe a recovery in the India business. Russia is estimated to grow around 8 to 10% this quarter as well. So the other markets, if they continue to grow, so maybe it would sort of cushion the fall that we could probably see in the US markets. Obviously, commentary will be top of mind for Dr. Reddy's. Remember that we did report about the EIR for the Vada plant. So any sort of remediation and when they expect a reinspection would be very important. And separately, we would also be watching out for other things such as pricing pressure in the US and what they're expecting there.
Okay, let's see if Dr. Reddy's can actually deliver. Stock's done well in this market rally. It's in fact up about 6% in the month gone by itself. So let's see if the company can meet expectations.